One trading strategy can truly change your life. It can give you the momentum to go from zero to over $25,000 in just 1 month. Just like I did last month when I had my best trading month trading ProFirms. And over the last 6 months, I've gone from just being profitable, which, don't get me wrong, I'm extremely grateful for, but now I'm absolutely smashing ProFirms with over $25,000 in 1 month. This is all because I integrated ICT into my strategy and drastically simplified my strategy. And in this video, I'm going to show you the exact strategy I use to make $25,000 per month trading just 25 minutes a day, so that you can copy my exact blueprints and get the same results. And it all comes down into 4 steps, and the first step is the most important but actually the most overlooked too. So guys, the first thing you want to focus on is your bias. So you want to really know your bias before you start trading any week. You have to know, okay, where am I going for? Am I going with the sells or am I going with the buys? Because just what I put here, and I not just put this here, I've put this here since. You can see, since the price was at this level, I just put only buys. I'm not here to fight. I'm here to make money. Something you need to know about trading. Trading is actually easy to make money, but you have to make up your mind. Because when you go into the market, you have to say, okay, there are going to be opportunities. Of course, there's always opportunities in the market, but you have to say, okay, this week, I'm only for buys. That's all I'm doing. If you see sales, you're like, no, I don't want it. I'm only for buys. So as you can see here, I put buys here because clearly the market is in an uptrend. So first thing you want to start with is you want to know what's your daily bias, what's your weekly bias, what are you going for? Okay, I'm going to the week. Now, what am I going to do this week? Am I buying or am I selling? So as you can see, my bias was buys, all true. So as you can see, I said buys. So after you got that straight, the next thing you want to do, you want to go. So this is where ICT comes in, or smart money. This is what you want to do. So I know I'm buying right now, right? I know I'm buying. So you go on your 4 hours. So you go on our 4 hours right now. Now, say price is at this level here. So these are small trades I caught here. This is GB card, by the way. So say price is on this level here. Down here. Say price is down here now. Okay. Now this is where the ICT and smart money comes in. Your bias is buys, right? So this is what you do. You go and start marking up your liquidity points. You want to mark up your liquidity points. You want to know your targets. Liquidity is our target. We target liquidity as our take profit. This is what really changed my trading, because before I was stuck like 1:2, take my 1:2 profit, no problem, 2R. But now with being able to target these liquidity points, my TP is much higher because I know that price is likely to go to those liquidity points. Because those liquidity points at this scenario is where sellers are. So now we'll start marking our liquidity points. So let's do it. So let's say first liquidity point here. So we'll mark our liquidity points on the 1 hour because it's much clearer there. You can easily see the candles, see the spikes. So you go on 1 hour. So now as you can see here, we didn't have to go down here. There's liquidity here. So this our first liquidity point here. As you can see, these are where sellers are in the market. So you mark it up there. So you mark your second liquidity point. So you just keep on marking. These liquidity points are what you're going to use as your target. These are what you're going to use as your target. So you're not going to be scared like, oh, should I close now? Should I not close? What if I don't close now? The market will go against me. No. Once you know your targets, you're more confident, like, okay, price will get there because the market don't give free money. So sellers here, the price must surely come and take out those sellers because market don't give free money. So we mark out our liquidity points. We keep on marking. You can see there's some liquidity points here. Keep on marking. So after you're done with that, now you have to mark out your levels. You cannot just mark out liquidity points and say, okay, let me just enter the market. Okay, what structure is going to break? You have to follow structure. So clearly we can see that price is going down. It's a downward structure. during this period. Now you can also add your trend lines. These trend lines, you can use them as liquidity. It's like liquidity build-ups. These are these are our liquidity points. These levels here, these lines here. Now you combine them together, is liquidity build-up. So maybe we'll hit our trend line year to year. Okay, it's not looking nice. So let's do something else. So just say year to year to year. You see that? Now those liquidity points come together. That's the liquidity build-up. So now we have our liquidity build-up now. So all we have to do is for price to break this trend line. Breaking this trend line will just act as, okay, price is ready to go after those liquidity. It has broke the channel. So price is moving in this trend line. It's following this liquidity, following it. But now it has broken this trend line. There's a chance it might go to the top of the trend line. So now it has broken it. We'll wait for a retest. Simple. As you can see, this was my entry here. Simple. It broke structure. It broke the trend line. Now my liquidity points are active. I'm targeting. Where am I going? Where is my first liquidity point? Where am I taking my first profit? So as you can see, obviously I didn't hold too much on this one because I was already running over 1:3. So yes, I know your target liquidity point, but doesn't mean you put your this in 1:5, 1:7. But be wise. Money is money. So yes, I know this is my first liquidity point, but I will get to that first. I took my first trade here. My target was at this support level here. So you still have to respect support. I don't say because you are using ICT or you're using smart money, you don't respect support and resistance again. Support and resistance need to be respected. Supply and demand, it works. It's life. Supply and demand is life. It happens every day. It's not just in the market. It's life. So respect it. So as you can see, this demand turned to supply. We respected it. So put our TP there. Price came. It actually played around. It came down. I think we close around here normally, but it came down. It smashed the TP. Boom. Good. Now, guess what price even did again after hitting the TP? Liquidity build up. Guess what happened again? This is like extra confirmation. Extra confirmation. Okay, I didn't take it before this third liquidity, but this double top here was liquidity build. I was just like, God, this is so freaking good. Like, it's like you guys don't understand. It's so freaking good. I just saw it like, thank you. I put my other key levels. I put my other key level here. Support and resistance. It still works. You use everything with it. I put it there. I took my entry at this big candle. Yes, it's a bit big, but it's still fine. I took my entry there. Boom. Boom. I think I haven't posted the trade online self on YouTube on my last video. So I took the entry. The weighted build up. I didn't care about the support and resistance then again because I know it's going to go up. Then my target was this other liquidity build up again. As you can see the way we're going. This other liquidity build up. Guys, smashed it. Spike took out the liquidity. After taking out liquidity, it started going down again. You can see how it goes. You can see how it goes. Okay, let's keep going. Now, price smashes its liquidity points. Price smashed liquidity points. Now, we took our TP. We couldn't find any other entry here because I saw that this other liquidity point was pretty far. So I didn't want to like raw dog it. I didn't want like, okay, let me just aim for that far. So I could take an entry here, but I was like, this liquidity point is too far. So maybe I took an entry here. You can see how this works, honestly. So maybe I took an entry here, because this is where I would take an entry, break of structure, retest. Okay, let me align it for you guys. Break of structure, retest. You take your entry from there. So, say we took our entry there. Stop loss. Yeah. It's a bit big, but just say we did it something like that. You can see how far the liquidity is. You can see how freaking far it is. Liquidity point. So I was like, 200 and 300 pips. This is freaking far. I don't know if I want to like aim that far. So I just had that, okay, let me just tell this one. Let me wait for another somewhere that, okay, once the liquidity point is closer, there's more chance it's going to hit it. You're like, okay. So maybe you are running, right? You are running. Let me give you an instance. You are running. You're almost at the finish line. You're like, okay, it's already there. Let me just get there. just like magnets. Yes, you know the magnet will surely come together, but at the end, the closer it is, the higher the chance it's going to hit, it's going to come together. So that's what I just saw. So that's our liquidity point there. And you can see it took out liquidity, same thing, I took on that entry here. So as you can see, these are all the things I'm talking about here. We started from the first point is getting your key levels. No, not key levels, get your buyers. Your buyers. Second, your liquidity points. You have to know your liquidity point. Third, then you get your key levels. Your key levels. Once you have your key levels is your support and your resistance, things like that, break of structure. So once you have everything like that, bro, you should be making money. So I don't actually spend a lot on the charts. I just spend like, the most on the chart I spend is during the weekend when I have to journal my trades and okay, what happened this week, what didn't happen, then analyze for the week. But during the week, I spend less than 25 minutes on the charts. I just put down my key levels. If price has broken it, I take the entry. I'm out. I do something else. So that is basically it, guys. So if you like this video, if you gain value from this video, hit the like button, hit the subscribe button as you know it. Don't forget to smash MT4. Peace.